I worry that this can lead kind of into a debt trap for a lot of people. They'll think, well, I'll jump into this and then I will pay down my mortgage faster. And when I get that raise or bonus, that's what I really worry about, is that debt trap scenario here.
Friday, November the 14th. Man, love Fridays.
I know you do.
Yep.
You always look so happy coming grinning.
You know what? I do. But I can't believe where the weeks go.
Yep.
You know?
Well, it's a fun one. It's what happens when you put out a daily product, right? Like, it's different.
Yeah.
It's a different beast. We talk about a lot of long-term things at this company and what we're working on.
Yep.
But you still have to pump out a show every day. And this one kind of came together rather quickly as well. And sometimes we have some that, like the Wealthy Barber, that was weeks in advance, that was planned. You'd book the guest.
Yeah.
He was in the calendar almost a month, I think, before we had him. And then there's some like today where we just kind of come in the morning and say, I think this is what we're going to talk about.
And sometimes those are some of the best conversations, right? Because there's very little thought. It's just, it's an important topic. Let's jump in and do it.
Well, it's because most of our conversations come off the headlines, right?
Course,
and sometimes the headline is something that's a long-term issue that's going on for a long time. And sometimes it's just something that happens last night or a couple days ago, like Donald Trump talking about 50-year mortgages.
50-year mortgages. Holy jumping.
Just stopped me in my tracks when I read that, because mortgages, if you're fortunate enough to own a home, mortgages dominate your thought process for many, many years.
Absolutely.
You're saying, okay, how much can I pay a little more on this mortgage? Am I going to pay it off? How much longer until it pays off? Should I remortgage to do something else? Should I be jumping out now? It's always on your mind, right?
Always.
And we're fortunate if you're able to get to that point where you're able to have a home and you have a mortgage. But there's a lot of thoughts that go into it. And, Trump comes out and says in a proud way that I'm going to bring out 50-year mortgages. And a lot of people got excited because it means lower payments up front.
Well, sure.
But you're going to pay double the cost of the house.
But they don't think about that part,
They don't think
right?
about that because they're trying to get in. They're just trying to get in the market, which I get too, right? It's like, well, I can finally – who cares if I pay this for the rest of my life till I die? At least I own it, right? It's my house. But it's like I don't want to – it's not even about Trump. It's just I feel like we do kind of live in a world where things just get thrown out there all the time, not just from him but from all kinds of politics. Say, well, we're going to do this. We're going to bring in this. We're going to bring in that. And it's like, well –
Well, you know that expression, right? Let's throw some you-know-what against the wall and see what sticks.
See what sticks. Well, I'll tell you what sticks in that is your payments forever.
For 50 years.
They stick around.
Yeah.
So we're going to talk about 50-year mortgages because the obvious question that everybody has when they're reading it north of the border is, do we have that in Canada? What's the close with that? And is there any chance that we would do that here? So we're going to talk to Dan Eisner from True North Mortgage. Obviously, there's lots of mortgage experts out there, but Dan knows as well as anybody about how this all works and the pros and cons. So we're going to talk to him about that and a bunch of other things.
All right. U.S. President Donald Trump is floating the idea of introducing 50-year mortgages. Yes, you heard that right. 50 years as a way to help more Americans attain home ownership. The idea has triggered quite the discussion, including here in Canada, where the obvious question is, could that happen here too? To help us answer that question, and probably a few more, is Dan Eisner, the founder and CEO of True North Mortgage. Dan, thanks for joining us on this Friday night. We appreciate your time.
Yeah, no problem. I'm glad to be part of this.
All right. We're going to get to that obvious question, but let's start with the basics, Dan, if we can. When you heard the president's idea, what went through your head?
Well, you got to imagine, the average person and first-time home buyer in the States now is reported at 40 years. Having a 50-year amortization really means you will die with a mortgage. And if you do that in Canada, so many Canadians use their home as their life savings, and this is not a good business plan. This is not a good retirement plan. This is not a good financial plan.
I love the fact that you didn't sugarcoat that. You will die with a mortgage. Dan, there are pros and cons, obviously, to this. A 50-year mortgage could help lower monthly mortgage payments, but it would also mean a massive increase in costs over time. Could you maybe speak to that a little bit for us?
Yeah, it does depend a little bit on the interest rate you're kind of assuming. But if you take about a 4.5% interest rate, which is, I guess, historically pretty average, you will pay, in comparison to a 25-year amortization, about 2.25 times the amount of interest over that 50 years.
Wow.
So it'll be death, taxes, and I guess a mortgage will be the only inevitable things in your life.
Yeah, that's wild. Like you mentioned earlier, you create almost like a borrower for life. The obvious question is, this is not something that's on the radar to come to Canada?
No, I really don't think our regulators, OSFI, has any appetite for this sort of thing. Now, it's not completely unheard of. In 2007, 2006, right around there, Canadians were toying around with a 40-year amortization. That was something. And then if you look on the multifamily side of the business in CMHC, they actually do have a 50-year amortization for multifamily construction for affordable housing. So it's not unheard of, but in those cases, this is a business. Multifamily property is a business for business reasons, and so it kind of makes a little more sense of that. Not for the average Canadian.
Can you speak to why we scaled back? I do remember there was talk of the 40-year mortgage, but they realized that wasn't a good idea. What was driving that decision?
Yeah, it got a lot of people in trouble, I guess, is the answer, the quick answer to that. Yeah. I mean, paying down your mortgage is a great way to reduce the risk from a lender's perspective on that mortgage. Principal coming down obviously just makes the mortgage less risky. 40-year amortization just increases that risk for a longer period of time.
Mm-hmm. So, Dan, just for the record, what's the longest mortgage you can currently get now in Canada?
Yeah, so for the average Canadian, it's 25 years. Some Canadians can be up to 30 years, first-time home buyers, insured mortgages.
Does it? I guess the obvious when you hear about people talking about this on the news, especially in the United States, or you hear about the Trump administration talking about this, they're appealing to those people who don't know all the details and are saying, "Well, wait a minute, that means my monthly rates, my monthly payments would go down, a significant amount of money, a few $100s here and there." How much does that concern you that people will only look at that one aspect of this when they hear about this?
Look. That same sort of analysis, your payment will go down by about 25%. So that's not insignificant, and it could be really helpful. I worry that this can lead kind of into a debt trap for a lot of people. They'll think, well, I'll jump into this, and then I will pay down my mortgage faster when I get that raise or bonus. That's what I really worry about, is that debt trap scenario here. Now, Canadians, Americans are different people. Okay. In the U.S., mortgages are tax deductible. So it kind of encourages you to get a large mortgage. So they do. In Canada, we don't have that. So we don't. And when we look at our own customer base, because of course we have our own in-house lender, we do about $2 billion of mortgages a year on those things. When we look at our database, about 25% of our clients did some sort of lump sum payment in the last 12 months. Mm-hmm. So Canadians like to pay down their mortgage faster.
That's interesting. I didn't see, these are the dumb questions we talked about earlier before we jumped on. I didn't realize you could deduct your mortgage. I didn't know that at all. And that's how much can you deduct?
Oh, well, man, that you asked a really complicated. In the States, you can deduct your mortgage. And they had this new rule. It used to be like the whole interest, but now it's just up to like $1 million. If your mortgage is, there's a bunch of rules that came out to kind of reduce that deductibility, but it's still, it's a big difference between Canadian and there's a number of
differences. Yeah. And that's what I was also going to touch on the next one too. The other difference is, from what I understand, the rates in the States, you pay them forever. They're kind of your mortgage rate for many, many years, whereas here it's every 5 years, renew 10 years. Why is there a difference like that? What is the difference and why?
Okay, so one, your amortization often matches your term. So you get 20-year term, 20-year amortization, 25-year term, 25-year amortization. Unheard of in Canada. Okay, we all get 25-year amortizations and we get 5-year terms, 3-year terms, something like that. Mm-hmm. Now, why? Well, actually, in the Interest Rate Act in Canada, it specifically says that if a mortgage is longer than 5-year term, then you can only pay a 3 months interest penalty, not the IRD penalty, interest rate differential penalty that a lot of banks rely on. In the States, they never have IRD penalties on any term. So it's a very different market. So that leads to a whole bunch of ramifications. For example, if the whole overall market a couple of years ago was in the 7s and 8% mortgages, and all of a sudden rates fall to 3 or 4% for whatever reason, everybody in the U.S. refinances. No penalty to it. right? And so you get a dramatic increase in the amount of refinances. All of a sudden, 70, 80% of all transactions in the US are refinances. That's a big deal. In Canada, we have RRD penalties. So if you got that rate at 7 or 8%, whatever it is, and now the rates are down, well, you have to pay an RRD penalty, which means you just won't do it. So we don't get that kind of that churn that they get in the US when rates go down. So that's part of the answer.
Dan, let's talk about the younger generation for a sec. We all hear, kids trying to scrimp and save, to get their down payment for a mortgage. Are there incentives available currently for first-time home buyers?
Well, there is some incentives. If you buy a first-time, a new construction, you can get the GST waived. Sometimes you can get up to 35-year amortization. So there is some incentives for first-time home buyers. But in the end, those are expensive properties. It's hard to save up enough money.
That's a great point. Can you talk a little bit about defaults, Dan? I mean, obviously, these are tough times. People are concerned. There's been some, there's been a lot of people are facing financial trouble.
Absolutely.
Have you seen a higher rate of defaults or non-payments over the last, say, couple of years?
Yes, but it's like nowhere near what in the U.S. Well, I once saw Wells Fargo being a large bank in the U.S., and their default rates were about 1% of their portfolio. That's unheard of in Canada.
Okay.
Absolutely unheard of. Our in-house default rates are about 0.1%. The industry is about 0.2. Have we seen it increase in some markets to 0.3 or 0.4? Yeah, we're starting to see some of that, but there's nowhere near 1%, which is just a normal rate in the U.S. Canadians just don't default on their mortgages anywhere close to what they do in the U.S.
Just want to pick up on the question of home ownership for a second. Because of the cost of it, we see everything is more expensive nowadays. Are you seeing a shift in your business from people buying or trying to buy to shifting to renting?
Oh, well, I mean, I only see the purchases. I don't.
Yeah. So in other words, are you seeing a shift in your business, say year over year, or in the last 5 years, a decline in the number of mortgages that you're involved with?
Well, we're just a small part of the market. So we've seen our business grow. We have competitive rates, so we get a lot of those type of deals. We've definitely seen the number of condos in Toronto and GVA, the Vancouver transactions. That's gone way down.
Yeah.
Yes.
We see some hesitation in Richmond, BC, as a result of some recent legal happenings. That's affecting us. What I really thought was a real miss, because this is not about a demand. I mean, Trump with the 50-year amortization, he's trying to encourage demand. This is not a demand problem. This is not a demand problem we're having in the U.S., and it's not a demand problem we're having in Canada. We're having a supply problem. And how do you affect more supply? And I think one of the ways the federal government could have affected supplies is taking GST off of all new home construction, not just first-time home buyers and new construction. Because, you tax things you don't like. You tax tobacco because you don't like tobacco. You tax alcohol. You don't like alcohol. Why would you tax new home construction when you want more of it? So I would have thought it was a real miss to get rid of that GST on new home construction. That would have helped a lot of builders sell homes and encourage them to build.
I appreciate you bringing that up because that's the one thing we're talking about every day, right? We hear different levels of government talking about how we're going to help build more housing in this country. Are there other things that we could be doing better, Dan, in your opinion?
Oh, I think a big part of this issue is zoning and bylaws. And I mean, this is a municipal issue. I mean, we talk about it from the federal point of view, we talk about it from the provincial, but in many ways, this is a municipal point of view. I remember years ago, Justin Trudeau said in an honest moment, he said, look, the federal government, we can't do this. We can't hold it. We're not responsible for housing. And I mean, in his defense, he was right. These are municipal issues. Zoning and bylaws are municipal issues. In Calgary last year, we had blanket rezoning, allowing multifamily construction in a whole bunch of areas in central Calgary, okay? And then we saw a boom of construction happening, okay? And as a result, we saw home prices moderate and rental rates moderate. Exactly what you would expect, okay? That needs to happen in Toronto. And that's not the government going in and building houses. That is the government saying, okay, look, people with private properties can do with it what they want, and that includes building, sixplexes and eightplexes and the like. That is the real solution to this. Density, but not high-rise density. I think Toronto went some of the wrong direction on some of these, 300-400 square foot condos. That's not what I'm talking about here. I'm talking about livable homes that are 3 bedrooms that you can have a kid in, and they're not an hour and a half drive in from Toronto. We have offices in Toronto, and I feel for our staff that have an hour and a half long commute. Just unbelievable. But there's no other choices in Toronto.
It really is insane. And when you bring that up, it's true, right? Because we hear about this, the 4plexes, the 6plexes. Is it basically NIMBYism that's keeping people from, the people are so against it? Or what is it what's the big problem with people building something like that?
This is absolutely NIMBYism. Absolutely NIMBYism. I mean, I'm actually building an 8plex myself here in Calgary. And it's only because of this blanket rezoning that I was able to do that. But, do the neighbors love it? I mean, you kind of want density near the down. Like your area in Toronto is in Kensington, right? The surrounding area. That's a great place for these 8plexes to go up, but you're just not seeing it. And why aren't you seeing it? NIMBYism is really the answer. City councilors respond to the voters in their communities, and the community, and those voters don't want this in their neighborhood.
Yeah, and you mentioned the 400 square foot condos. There's another pet topic of mine, right? I mean, Toronto's just been just full of them, right? They're just building like crazy, and now nobody wants them. Where do you see those in 5 years?
Oh God,
we're really putting you on the spot here, Dan.
You're going to be in for the roller coaster of a lifetime here in Toronto. Okay, so you got none of these condos selling, and all new condo construction has really ground to a halt in Toronto. Okay, and because they're not selling anything, understandably. Now, but it takes 5 years to make these condos. So eventually these condos will be absorbed, maybe as rentals or Airbnbs or whatever. They'll get absorbed one way or another. And then a whole bunch of people will say, okay, where's the new condos? And there won't be any. And then you're going to see these condo prices shoot up. It'll be the condos that are actually livable, though, to be sure. Okay. But I mean, 700 square foot condos are livable. And if you have a 700 square foot condo in Toronto right now, you can sell it, right? Yeah. Those ones are selling. You don't hear about those ones. You hear about the 300 square foot ones, but you're going to have a roller coaster. It's going to be a roller coaster for sure.
Didn't we read for the first time about a month ago that you could get a 1-bed, 1-bath in Toronto now for less than $350?
Yeah, exactly.
That seems unheard of.
It seems like you're going back 20 years. Yeah. So what you're saying, Dan, is someone who owns a 900 square foot condo in Toronto should hang on to it for a few years, not get rid of it.
Yeah. Those would probably be good bets. Now, I'm not sure if you want to take real estate advice from a guy living in Calgary, but whatever.
You seem like a good guy, Dan. I'm very gullible. I'll listen to anybody. whatever works. So really the thing, we just need Donald Trump as the president of Canada and everything will work out.
Well, maybe there's something to that whole 51st state thing.
Yeah. Anything else, Dan, about... sorry, I cut you off. Go ahead.
Something you said there. Okay, so look, the 50-year amortization, maybe not a great idea. Okay. But what I think got lost in the noise is that he said we should also have portability in the United States. Portable mortgages, okay? Those are everyday things in Canada. We have our clients porting their mortgage all the time.
Right.
And they don't do that in the States. And it always perplexed me. Why not? Okay. Now, I'll give you an example. Okay. You bought a house in COVID. Okay. You got this super great 20-year term mortgage at 2% or whatever, 2.5%, right? And you're like, this is fantastic. In the States, if you move, you lose that rate 100%. Okay. Like you're going to lose it. But there's this great job, 2 cities over, and you're like, I want to move, but I don't want to lose this 2% rate. Okay. All of a sudden my rate's going to go from 2% to 5%. I don't want to lose that. And so you just don't take the job. Okay. And that's a big deal. That's a ongoing issue in the United States. A lot of Americans are deciding not to go to where the jobs are because they're locked into this mortgage rate.
That's fascinating.
And if they can if they can take that mortgage with them, and I can't see kind of a good logical, rational reason why they can't. There's legally they should be allowed to. It just seems like a practice that really benefits U.S. mortgage brokers, U.S. banks, U.S. lawyers, and not really benefiting the consumer. Portability, it's a great idea. We do it all the time in Canada. Allows our customers to move from city to city, wherever the jobs are.
Fascinating. So do you think it'll ever happen? Do you think that they'll actually bring in a 50-year mortgage in the United States?
No, I don't think they'll bring in a 50-year mortgage. I mean, and portability. I'm not sure how much it's a federal issue to mandate portability. I think it's kind of like on a bank by bank basis. Maybe the bank regulator has to say, look, we want to see this sort of thing. But portability is a good idea.
All right, good stuff. Good chat, Dan. Anything else on mortgages we didn't touch on that maybe we should have?
I think we covered a lot. I think we did a lot.
I think we solved a lot of the world's problems here tonight. Good stuff, Dan. Thanks for your time. There's Dan Eisner, the founder and CEO of True North Mortgage. Thanks, Dan. Have a great weekend.
Yeah, thanks for having me.
I know sometimes I'm not the clearest, and I try to. The question I was trying to get across to Dan was, in your business, are you seeing a shift? Because we know how damn expensive it is now for people to try and save up down payments for mortgages and for homes. Are you seeing a shift? That's really
I see what you're saying. Yeah. And what he's saying is that they're kind of a boutique mortgage provider, and their business is growing. You know what? I love that guy. Thank you to Dan, because I emailed Dan about an hour ago and said, can you jump on the show on time? And he's like, yeah, I have some time, and he jumped on. And I didn't know Dan. I think I've probably read his name in the media before being quoted, but I just love the conversations we have on this show. Who knew that was going to be so great? So I appreciate that. We did joke with him after that we're going to call him more often just to talk about anything, because he's very
good talker, good guy.
Yeah, that was great. But I tell you, man, the 50-year mortgage. I mean, that's why I wanted to do a show on it. Just when I read that headline, it's bonkers, right?
You'll be dead.
You'll be dead. You'll be paying up for life.
It's like a generational thing. You just keep handing it down from one generation.
And, well, I guess
to the next.
but then if you get in the house, right? You pay it for 30 years and you die. Then your kid takes over. They have less to pay on it. They inherit the house.
Yeah,
it's probably worth a little more.
What if
than
they don't
it
want
was.
the house though?
But then they could sell it.
Yeah, I guess.
And it's probably worth a little more than it was.
What a shift, though, eh? Because in our generation, you were always taught, you buy a house, first thing you do is pay that thing down as quickly as you can. Be done with it.
Yeah.
Right?
But look at the Wealthy Barber on Monday. I rewatched that again because we're running a snippet of it over the weekend. That he was just very clear that it's just way more expensive than it was even then. And the boomers don't get that. It's just it's way, way different. You couldn't buy a house for $12,000 and pay it off and get it down. It's just a different way.
You just call me a boomer?
I didn't call you a boomer. Right, Would you classify as a boomer?
What's the parameters?
I don't know.
I don't know.
Gray hair?
Yes. Yes. Check. All right.
Good stuff.
Okay. Good week.
Great week. Amazing week. I would encourage anybody to go back and the Wealthy Barber was fantastic. Dr. Bowdish talking about measles was great.
Yeah.
Yesterday was great too. I forget. I have a short memory. Who was yesterday?
It just all rolls into one. You just forget. AI.
Oh God. Sorry.
How could you
Sorry,
forget?
Alan. I wanted to forget it because it scared the hell out of me. I
know.
didn't want to remember that one.
Here's the beauty, though. If you sign up at closerlookpodcast.ca, Saturday morning, you could be sitting there, boom, you'll get an email of all 5 episodes.
Yes. Stop what you're doing.
Stop everything.
Or you could be like people I know who just put it on their audio podcast and listen away as they're mopping the floor.
Tell you, we're everywhere.
Yeah.
And happy to be everywhere.
Yeah. And you know what? We have a good week next week. Good guests coming up next week. Get ready.
Oh, good hook. Good tease. Love it. All right. Closer Look at villagemedia.ca. Closerlookpodcast.ca. It's been a week. Thanks for hanging out with us. As always, tonight's show and every show produced by Derek Turner. For Michael Friscolanti, our editor-in-chief here at Village Media, I'm Scott Sexsmith. Have a wonderful weekend. We'll see you Monday night at 7, as always, right here on Closer Look.
Frisco and Scott's Wardrobe provided in part by Moores, Sault Ste. Marie.